And Steve, digging through the numbers, anything else jump out?
Can I just remark that, you do this long enough and all of a sudden a data series that for like 15 years didn't matter now matters?
Now, it matters based on the last
Can you
jobs
remember
number
when
we got.
anybody cared about import prices? And the reason we care is because of tariffs.
Right.
And not only just import prices, but we care specifically about import prices from China, which I am about to deliver to you. Having dug through the numbers, as you said, we're down 1.4% year over year, down 1/10.
Import prices were down, but I thought
from
those
China.
Numbers did not include tariffs. Am I wrong?
They don't include tariffs. What we're seeing here, right, I told you that, and it is accurate from the BLS. What we're seeing here perhaps are two things: the effect of currency. In other words, the Chinese currency has devalued or depreciated, and perhaps producers taking a piece of the pain. Yeah. There's 25% of pain, but we're seeing that a very small piece, minus 1.4%. Broadly, the U.S. economy seems able to take this because we're not getting a surge in import prices. We're not getting a lot of inflation overall. You have petroleum prices going up, going down, whatever, and a lot of other things going on. And just very quickly on the jobless claims number, we're not seeing the weakness that we saw in the BLS reflected in the claims number.
That's the number I thought you were talking about at the beginning. Which number is important? I mean, that number was very important all of a sudden because of Friday's jobs.
Claims is always important. Claims are always important. And the only problem with claims is that it's a little asymmetric. They give you a very good signal on the upswing, but they don't necessarily give you a signal on the downswing, only because I think employers tend to be reluctant to fire. So you wouldn't see necessarily if things were slowing, you wouldn't see a big pop in claims right away. That might be, in that instance, it's lagging. In the upswing, it might be a leading indicator.
David, what do you think of these latest numbers? What does it tell you about the economy and which trajectory we're on?
Well, if we start with the claims numbers, we've seen low numbers now for months and months. And certainly as a share of the workforce, claims are essentially at all-time lows. So employers are very hesitant to let workers go, and that's a sign of a tight labor market. Now, on the import prices, and I think Steve's exactly right. Nobody paid much attention to them before. I think that it's primarily the strong dollar. So the dollar being strong keeps import prices low. It makes the Fed's decision a whole lot easier if there's not much inflation. Then they simply have to look at what's happening with unemployment.